Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. So if you are looking to take your swing trading game to the next level, then you have clicked on the right video, okay? Because in this video, we are going to be taking a deep dive into the best moving average settings for swing trading, all right? Now, one of the most essential indicators for identifying trends and making more informed decisions in the market is the moving averages. Okay, the moving averages are very popular indicators that a lot of traders use. Okay, but before we get started, don't forget to hit that like button and subscribe if you haven't already. We've got a lot of exciting content lined up and you won't want to miss it. Now let us get into it. Let me start by just loading a moving average on the chart. All right. Now, moving averages are one of the most popular and powerful indicators in a trader's toolkit. Like a lot of traders use the moving averages, okay? The moving averages help smooth out price action, which allows you to identify the overall market trend more easily, okay? So if you are just starting out with moving averages, think of them as indicators that give you a clearer picture of where the market might be heading, okay? But there's a catch, right? There isn't a one size fits all moving average settings for swing trading. What works for one trader might not work for another, okay? And the ideal setting can vary depending on your strategy, trading style, and the specific market that you are trading in. All right, so that is what we are going to break down today in this video. Okay, the best moving average settings for swing trading and how you can tailor them to fit your trading plan. Now, before we get into the specifics of settings, let's quickly talk about why moving averages are so important for swing trading in particular. Now, swing trading is all about capturing medium-term moves, right? Typically anywhere from a few days to a few weeks. If you are a swing trader, probably you are going to be focusing on 1 hour time frame, 4 hours, daily time frame, depending on the length of time that you usually hold your trades, but your focus might likely be from hourly time frame and above, okay? Because you are not like the scalpers that try to catch every single moves in the market, okay? Swing traders prefer long-term gains, right? Compared to all those short-term gains that requires opening a lot of trades. You can open a few trades in a week. You can open literally 1 or 2 trades in a week as a swing trader. Okay, so basically, we as swing traders we target long-term price moves, right? And moving averages can help you identify trends, okay, by smoothing out the noise and letting you see the bigger picture. So whether you are looking for entry points, exits, or just confirmation of a trend, moving averages provide a solid foundation. So having the right settings can make a huge difference when it comes to the accuracy of your trades. Now, before we dive into the settings, okay, let us just quickly go over the two main types of moving averages you'll be using in swing trading. The first is the simple moving average, okay, the SMA, and the second is the exponential moving average. So we have the SMA as one, and then you can see how the SMA reacts to price movement. Usually the SMA gives equal weight to prices, whereas the EMA, the exponential moving average, gives more weight to recent price data. Okay, so now both of them can actually be useful in swing trading, both the EMA and the SMA. Okay, both of them can be useful. Each of them has their strengths and weaknesses. So we will talk about when and why to use each. All right, so let's get to the part that everyone is waiting for. Let's get to the part where I feel you have been waiting for, and that is the exact best settings for the MA, all right, for swing trading. So as a general rule of thumb, there are a few standard periods that traders use, okay, and we're going to explore them now, right now. Now, the 50 period SMA or EMA, okay, this is one of the settings for a swing trader, right? The 50 period, all right. Now, this is one of the most popular settings for swing traders. The 50 period moving average is a good middle ground. It captures the longer term trend without being too slow to react. Okay, so whether you are using the SMA or the EMA, the 50 period moving average can give you a solid sense of where the market is headed over a few weeks. All right, so if the price is above the 50 MA, the 50 moving average, it's often a sign that the trend is bullish. If the price is below the moving average, is often a sign that the trend is bearish. So a crossover of price above or below the 50 moving average can signal a potential shift in trend. So in a situation where you had a bullish trend initially, like what we had here, and then you suddenly saw the price of the currency pair, whatever currency pair you are trading, you suddenly saw the price drop below the moving average. That shows a change in momentum. So initially we were having a bullish momentum here, and then when price dropped below the moving average, we had a change in momentum from bullish to bearish, and then having price trade under the moving average shows bearish momentum. So when you have the price cut above the moving average, it shows a change in momentum from bearish to bullish. So if you are looking for buy opportunities, then you should be looking for price trading above the moving average. Your buy opportunities should come when the price is bouncing off the moving average upwards. So you're gonna enter a buy trade. You can decide to enter a buy trade after you see the price bouncing off the moving average in upward direction. Then for sell, you have to be looking out for when price is bouncing off the moving average in a downward direction. So when you enter a buy trade, you can set your stop loss just below the swing low, all right? When price bounces off the moving average, then you set your stop loss just below the swing low, right? Then you can target the nearest resistance level as you take profit, or you can just wait for price to drop below the moving average and then use it as your exit signal for the buy trade, right? Then in the case of a sell, when you have price trading below the moving average, you can enter after you have confirmed the signal, and then you set your stop loss above the swing high, and then you can use your nearest support level as you take profit for your sell trade, or you can just wait for the price to cut above the moving average and exit your sell trade. Okay, now for traders who like to identify longer term trend, okay, longer term trade, you can use the 200 moving average, the 200 period moving average. Okay, all right, this is used by many traders to identify the long term trend. Okay, let's go to the weekly time frame and we're going to look at this. Okay, so we can see now, this is especially helpful for swing traders who are looking for confirmation of a larger trend. So those who use the 200 EMA, swing traders, they might be the type that focus on the daily or weekly time frames, okay, or even monthly, because the 200 EMA covers a longer period of time, 200 periods, okay. So you are looking for longer term trend. So that's the reason why you would want to use the 200 EMA, okay, and this is just the 200 EMA alone, not two moving averages, but just one. All right. So the 200 moving average smooths out price data. It smooths out price action over a much longer time frame, and it makes it an excellent tool for trend following strategies. Okay. Now for swing traders who like to get in and out of trades a little faster, maybe those that focus on the 4-hour time frame, for example. If you are a swing trader that focuses on the 4-hour time frame, you might consider using the 20 moving average, whether SMA or EMA. All right. So if you like to get in and out of trades a little faster, maybe just a few days, maybe you just want to hold your trades for a few days, then you can use the 20 moving average. Okay, it's often used to determine short-term trends or entry points within the context of a larger trend. Okay, now you can also use it as a single moving average, or you can combine it with another moving average, for crossover strategies. All right. Now that we have covered the best moving average settings, let's talk about how to combine them with other indicators for even more precision. So a lot of traders use moving averages in combination with oscillators like the RSI. RSI is one of the popular indicators that traders use for confirmation. All right, to confirm the trend. So for example, when you have the price of the asset drop below the moving average, giving you a sell signal, then you just look out for the RSI and be sure that the RSI is trending downwards. Yeah, the RSI does not necessarily need to be in the overbought territory, but at least it should be trending downwards. Okay, that shows that it is having sell momentum. All right, so when the RSI value is trending downwards, and you have the RSI lines pointing downwards, in a downward slope like we can see here. You can see, so that confirms the sell momentum. So you can enter a sell after you get perhaps a bearish candlestick pattern. Then the reverse is the case for a buy, right? When you have the asset above the moving average and trending upwards, and have RSI also trending upwards, that confirms your buy, and you can look for a suitable position to enter a buy trade. Okay, now here are a few tips to keep in mind when setting up moving averages for swing trading. Okay, it's important that you adjust for market conditions. Not all markets are the same, all right? And the settings that work in one market might not work in another. For example, a 50-period moving average might be perfect for one asset but too slow for another. Okay, so always adjust your settings based on the asset you are trading and the market conditions. And then secondly, experiment with settings. Don't be afraid to experiment with different periods to see what works best for your strategy. Okay, you can adjust the settings on a demo account to fine-tune your approach without risking real money. Okay, and then lastly, avoid overcomplicating things. Okay, it's easy to get caught up in optimizing every little detail of your setup, but sometimes simplicity works best. See, simplicity can be very, very effective sometimes. You don't need to overcomplicate things. All right, a few moving averages can and a couple of additional indicators can go a long way. In fact, you can even use only one moving average and then one indicator to confirm your signals. You don't need to cluster up your charts with a lot of indicators. All right, so whether you are a fan of using the crossover strategies that involve two moving averages, or whether you prefer using just one moving average, you are good to go. All right, and then you can use another indicator, maybe a momentum oscillator like the RSI or the stochastics or MACD, to confirm the signals. All right, and then you are good to go. And then make sure that you also use trend lines, support and resistance levels. Those are also very important, right? Because support and resistance levels can really give you a heads up, some potential places where price could reverse, or price could pull back or continue. So they give you exit or entry points ahead of time. All right, so support and resistance levels are very, very important. All right, so if you enjoyed this video and want more content like this, don't forget to hit the like button, subscribe, and turn on the notification bell so you don't miss any of our upcoming videos. All right, thanks for watching and good luck with your trading. See you in the next video.